Hey everyone, this is Jason with Pries Capital Investment Research. At Pries Capital Investment Research, we meticulously track home prices, supply and demand, sales, and changes in this data every week, ensuring you have immediate insights into the Myrtle Beach housing market. Welcome back to our Chart of the Week segment, where we highlight key charts and their implications for the Myrtle Beach real estate market. Alright, let's dive into the data for this week's housing market update, starting with new listings. This week, we saw just 55 newly listed single-family homes in Myrtle Beach. That's 3.5% fewer sellers than last week and 6.78% fewer than this time last year. Bottom line? Fewer homeowners are putting their homes on the market this spring. In fact, this was the lowest mid-March new listing volume since 2022, just before the market cooled off. Looking at the chart, you'll see, the gold line represents 2024, showing last year's listing volume. The black line for 2025 is separating from 2024, trending downward. The gray lines represent 2017 through 2023, and they tell the real story. Compare the numbers: 55 new listings this week, 59 new listings this time last year, 89 new listings in 2019. So while we're not seeing a dramatic shift, we're also not breaking out of the post-pandemic seller shortage. So what's keeping sellers from listing? What's driving this behavior? Is it economic uncertainty? Not exactly. Many homeowners have been locked into their homes for years due to ultra-low mortgage rates. Since seller volume has been low for nearly 5 years, most homeowners still hold cheap financing. That makes it harder to justify selling, especially when new mortgage rates are significantly higher. But here's what's interesting. Not everyone is locked into an ultra-low rate. By now, some homeowners who bought within the last 3 years have financing that isn't as cheap. That means, for some, selling is becoming the better financial move. As time passes, more homeowners will gradually move out of the mortgage rate lock-in effect. Are we seeing the first signs of unhealthy economy sellers? The overall economy is shifting. Could we be seeing the first signs of homeowners selling due to economic stress? If the economy weakens, could we see an increase in sellers who are financially forced to list their homes? For nearly 15 years, we've had a healthy economy with low unemployment. If the economy starts to contract, we may see new sellers emerging due to financial strain. That's why we're watching new listings data so closely. These shifts happen fast, and they tell us a lot about the overall health of the market. So stay tuned, because the trends we're tracking now could define the market heading into the rest of the year. Now this week, the available inventory of unsold homes saw a significant increase, climbing 5.36% from last week to a total of 964 single-family homes on the market in Myrtle Beach. While it's normal for inventory to build at this time of year, this week's increase was slightly faster than expected. But here's the key takeaway. This increase isn't coming from new listings. Buyer demand is still light. So where is this growth coming from? Simply put, homes are staying on the market longer. With 49 more single-family homes hitting the market compared to last week, that's one of the biggest weekly jumps we've seen in a while. Last year, only a few weeks in April and August saw inventory gains this large. Looking at the chart, you'll notice, each line represents a year's inventory curve. The black line for 2025 ticked higher than expected this week. The gold line for 2024 showed a slower rate of inventory growth at this time last year. That means inventory is now 32.59% higher than it was at this time in 2024. For the past 6 months, inventory has been hovering 28 to 30% above the previous year. We've been assuming that inventory growth would slow in 2025 compared to 2024. Our projections suggest that by the end of the year, inventory will be 18 to 19% higher than in 2024. Now, here's the key thing to watch. Does the gap between 2025 and 2024 inventory shrink as expected, or will it keep expanding, signaling even weaker demand than projected? This week, the gap actually grew, which is something new and worth paying attention to. So, looking at the chart, keep an eye on whether the black line continues to separate above the gold line as we head into the second quarter. Bottom line? Inventory is growing, but the bigger question is how much will it grow, and will it continue to outpace expectations? This supply-side data is what we'll be watching closely. One of the most critical questions right now on the demand side is whether home sales are keeping pace with inventory growth. Unfortunately, the data this week shows that sales activity is slipping. The number of new pending home sales is declining for the spring. 61 single-family homes went under contract this week. That's a steep 23.75% drop from last week. But before we go further, let's clarify a key real estate term. Pending count, the total number of homes under contract but not yet closed, versus pending new count, the number of new listings that entered a pending status within a given time frame, in this case, weekly. So this week's pending new count is down sharply, meaning buyers are taking fewer homes off the market. Looking at the chart, you'll see, The black line for 2025 has been running about 3% below 2024 sales numbers. That gap widened this week, meaning home sales are falling even further behind last year's pace. The question I'm asking is, will this trend reverse? Here's where things get interesting. In Q2 of 2024, mortgage rates peaked, making it the most expensive time of the year for buyers. That caused sales to slow even more in the second quarter of last year. Will we see that same slowdown again this year? Or will lower mortgage rates help stabilize demand? There's some reason for optimism. Mortgage rates are currently about 50 basis points lower than they were earlier this year. That could help improve affordability and bring buyers back into the market. I'm going to predict that next week's pending home sales will come in slightly above the same week in 2024. Why? Q1 and Q2 of last year were extremely slow, so the year-over-year comparison gets easier from here. Even a small increase in demand could push 2025 pending sales above 2024 numbers. But there's another important trend to watch. Buyers are taking their time. Immediate sales, homes going under contract right after listing, are down significantly. Buyers know they don't have to rush into the market. Many are waiting for better deals or better financing before making a move. Even if we see sales pick up, we'll likely also see longer time on market as buyers stay patient and wait for the right moment to jump in. Bottom line, new pending home sales dropped this week, down 23.75%. Sales have been lagging behind 2024's pace, but the comparison should get easier. Lower mortgage rates could help boost demand, but buyers are still cautious. Watch next week's data. I'm predicting a small rebound in pending sales. Stay tuned. This could be the turning point for spring home buying activity. Key takeaway: no bullish signal for home prices yet. Based on this week's data, there's no clear bullish signal for home prices in the coming months. Inventory is rising, sales are lagging, and buyers are waiting for better deals. For now, the market remains in a holding pattern, and we'll continue watching for any signs of a shift in momentum. And that's all the data we have time for today. Whether you're a buyer, seller, or real estate agent, understanding these market trends is essential to navigating the year ahead. I encourage you to reach out and schedule a free consultation with Pries Capital. With our expert insights and data-driven approach, we'll help you make informed decisions that align with your real estate goals. Contact Tina at 843-999-1570 or call me directly at 843-945-0051. Sign up for a free Pries Capital Investment Research account at priescapitalrealestate.com and gain access to local real estate data for any zip code, city, or neighborhood nationwide. Book time with our firm today and start mastering the market. Let's make smarter decisions together. Remember, understanding the data is the first step to achieving success in today's dynamic real estate landscape.